FHA or conventional? Every first-time buyer gets asked this question, and most of them just stare blankly. So let's fix that right now, because the loan you pick could literally cost or save you tens of thousands of dollars over time. Choose wisely. Let's go. FHA stands for Federal Housing Administration, a government program that basically tells lenders, if this borrower defaults, we've got you covered. That government backing is why FHA loans are more forgiving. Here's what makes FHA attractive. You can get approved with a credit score as low as 580 and only put 3.5% down. If your score is between 500 and 579, you'd need 10% down. You can also have a higher debt-to-income ratio, meaning you can have more existing debt and still qualify. The catch? You pay mortgage insurance, called MIP. And here's what kills people. On most FHA loans, that insurance premium stays for the life of the loan. You can't cancel it like you can with conventional PMI. That can add hundreds of dollars to your payment every single month, forever. We're talking $100 to $200+ per month on a typical Portland area loan. A conventional loan isn't backed by the government. It's just between you and a private lender. To get one, you typically need a credit score of 620 or above, and lenders love you even more at 740+. The minimum down payment is actually 3%. Yes, 3%, not 20%. We're going to bust that myth in the next video. But if you put down less than 20%, you'll pay PMI, private mortgage insurance. Unlike FHA's MIP though, you can cancel PMI once you've built up 20% equity in your home. That is a massive difference. Conventional loans also have higher limits, meaning they work better for pricier homes. And sellers, they generally prefer conventional buyers. Why? Because FHA loans require a special appraisal that can flag property issues and create extra hoops. In a competitive market like Portland, that matters. Here's my dead simple framework. Pick FHA if your credit score is under 680, your savings are limited, or you have higher debt loads. Pick conventional if you have a 680+ credit score, solid savings, and a lower debt-to-income ratio. And here's a pro move. Get quotes for both and compare the total monthly payment, including mortgage insurance. Sometimes the slightly lower FHA rate doesn't make up for the permanent insurance premium. Do the math with your loan officer before you commit. One more thing. If you're a veteran, stop everything and look at VA loans first. 0 down, no PMI, often the best rates available. And if you're buying in a rural or suburban area, check USDA loans. Also 0 down for qualifying buyers. These two are criminally underused. FHA and conventional. Now you know the difference. Next video, I'm tackling the biggest myth in real estate, the 20% down payment lie. You don't need 20% down, and I'm going to prove it with math. Subscribe, and I'll see you there.